AST SpaceMobile just dropped from $102 to $71 after announcing a private offering. And everyone is asking the same question. Is this a dip or a death spiral? Because if AST actually pulls what they want to do off, connecting every phone on Earth directly into space, I think we're looking at a company that could rewrite global communication. But if it fails, it burns through billions and takes retail investors down with it. Now, they've already made actual calls, sent text, and streamed video from regular smartphones to satellites 300 miles above Earth. That's not a dream. It's already happened. And now they're gearing up to launch up to 60 satellites in the next year and a half. But what no one's talking about, the partnerships, right? AT&T, Verizon, Vodafone. They're not competing with AST, they're teaming up. And that means AST could plug into existing networks instead of fighting them. And that's a potential shortcut to scale that no other space company has today. Still, the company's bleeding cash, almost $100 million last quarter, but it's sitting on nearly $1 billion in liquidity. So yeah, it's losing money, but it's got the fuel to keep going. The question is, will that cash get them into orbit or run out before the signal goes live? Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. And in this video, I'm going to show you the one financial signal in AST's next earnings release that could tell us if this stock's ready to launch or fall back down to earth. So with all that out of the way, let's get into it. AST SpaceMobile is taking on a huge challenge in communication, and that's to eliminate dead zones. It's a bold claim. If they can pull it off, it could change how every smartphone on the planet connects. Founded in 2017 and based in Midland, Texas, AST is building the first and only space-based cellular broadband network, connecting smartphones directly to satellites. In English, it means that your phone could one day get a signal even in the middle of nowhere. At its core is BlueBird, the company's flagship satellite. And this thing is huge, roughly 2,400 square feet. And that comes with speeds of up to 120 megs per cell. That's faster than some home internet connections from orbit. Now, AST has already proven its concept by completing actual calls, texts, and even video connections from ordinary phones into space. That's not theory, it's real-world proof. Now, its next big move is to deploy 45 to 6 satellites over the next 18 months, putting it closer to global coverage. And if they nail this rollout, we're talking about near universal connectivity, and that could be massive. But here's where things start to get interesting. AST's partnership model is very unique. Instead of competing with existing carriers, they're working with them. Some of its partner companies include AT&T, Verizon, and Vodafone. It's a mutualistic, let's say, relationship that provides AST with a global customer base while its partners benefit from its advanced technology. That's smart, right? Instead of fighting these giants, AST is riding right alongside them. And I've learned that in markets like this, collaboration can be a faster path to scale than competition. Now, you're here because of the stock, right? And there's been some massive volatility with ASTS stock recently. The stock reached a new high of $102.79 on October 16th, but then fell. Investors, they saw huge gains. And when that happens, people tend to lock in profits fast. But that's not where the bad news ends. On October 21st, AST announced that it's going to be holding a private offering. And that's where things started to shake. Now, private offerings are not necessarily bad. They allow companies to finance their near-term needs, but it also increases the total share count of a stock and dilutes existing shareholders. It's kind of like slicing the same pie into more pieces, and your slice just got a little smaller. As a result of the announcement, the stock dropped massively to its current trading price of around $71. That's a 30% haircut in just a few days, and traders hate surprises like that. Still, dilution can also mean growth if the cash is spent wisely. So, what else do we retail traders have to look forward to? Well, the stock has an average earnings move around 9%. That means the stock has moved either up or down by nearly 9% every time the company released its financials, at least recently. It's volatility, and for some traders, volatility means opportunity. The only question is, which way is it going to swing next? And actually, it's something that's come up in my Discord because a lot of you want to know, and honestly, it's a fair question because I think this one, it could go either way. Now, in my previous video, I talked about the catalysts that can send AST stock higher. And if you haven't seen it yet, check it out after watching this video. But there's another facet, right? The company's financials, whose numbers could tell a completely different story from the stock's performance. And the numbers, they don't lie. They might reveal where the stock's really heading from here. Now, in AST's latest report for the second quarter of 2025, they reported that sales rose 28.4% year over year to $1.2 million. Now, yeah, it's small, but remember that the company is still in a pre-revenue phase. That means that its spending goes heavily into building the satellites and operating the infrastructure. So they're spending money now to make money, hopefully, later. And naturally, losses for companies at this stage, well, they're to be expected, and they can be heavy. AST, as an example, lost $99 million in their latest quarter. However, the full story is that it's tied to growth, which includes manufacturing costs, R&D, and planned launches. So AST, you could say they're not bleeding, they're investing. But that only works if the payoff comes soon, right? Now, switching over to their balance sheet, AST has $923 million in cash and cash equivalents at the end of the quarter. That's a serious war chest for a company that's still ramping up. And if we look at the overall numbers, that means that AST has a current ratio of 8.22. And we calculate that by taking their current assets and divide them by the current liabilities. And that means that the company is highly liquid. AST can easily pay its bills. And liquidity like that, it buys time, and time buys us options. Now, let's focus on what lies ahead because AST, they're expected to generate a total of between 50 and 75 million in revenue for Q3 and Q4, primarily from early commercial and government contracts. That's the kind of jump that gets institutions to pay attention. For reference, revenue from the first half of the year was only 1.9 million. And even though profitability is probably still unlikely, an estimated revenue growth of between 2,500 and 3,800% will help build momentum and drive AST closer to profitability. And that's exponential growth, the kind that turns small cap plays into headlines. But of course, projections are promises, not results. So the company is still in pre-revenue, but the upcoming quarters, they might actually change that. And if they hit their projections, I think it could be a big win for their stock. If they don't, well, we're going to know fast because the market has a zero tolerance or patience for missed guidance. Now that we've covered the financials, is AST stock a buy today? Well, a consensus among 11 analysts rate the stock a moderate buy, and this is a sentiment that's been consistent over the past 3 months. The high target price is $80, though recent developments and upcoming financials might affect the scores down the line and the target price. It's kind of like a tug of war, right? Optimism versus uncertainty. And whichever side wins, well, the stock will follow. So if you're waiting for analysts' opinions before doing anything, you might want to wait until November 13th. That's when the next earnings report drops, and it could be a turning point. But what about you? Are you buying AST, or do you think it's overvalued today? Let me know in the comments below. And while you're there, do hit those like and subscribe buttons because it'll help others find the video, it'll support the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.